Well, speaking of another founder here, on Tuesday, Volvo announced that it would be the latest car company to join Tesla's charging network, following in the tire tracks of Ford, General Motors and Rivian. But Wall Street is keeping a close eye on the EV leader after some bearish calls. You see, a series of recent downgrades of the stock begs the question about Tesla's current valuation and what these partnerships could mean long-term for the company. Let's get another take from Roth Capital Partners senior research analyst Craig Irwin. Craig, good to have you on the show here. So what do you make of what we've seen here with a lot of these downgrades, but still seeing these raised price targets?
Well, what's going on is that the stock has performed incredibly well this year. There was a very tough ending to last year. They cut prices, and those price cuts were successful in reinvigorating enthusiasm on the sales side.
Many believe that as Tesla continues to increase its production capacity and enters new markets, its stock price is going to reflect its growing market share and solid financial performance. While this is true, there are several factors that may affect the growth prospects for the company. Today, we've got an intriguing topic to share with you, one that's been making waves in the investment community and explores the reasons why more and more retail investors are flocking to buy Tesla shares. What is driving this surge in investors' interest? And is it likely to continue? We're about to find out. So take a seat, turn up the volume, and let's explore this fascinating topic together.
Retail investors are heading into the market in full force. Last week saw non-professional investors pour a record $1.5 billion into stocks. The majority of single stock inflow was into S&P darlings Tesla, Apple, and Nvidia. That's according to data compiled by JP Morgan. But did retail join the YOLO rally too late? In the past week, Nvidia shares, for example, have steadily declined, down almost 5%. With more on the state of retail traders, we're joined by JJ Kinahan, IG North America CEO. Hey, JJ, good to see you. Timing the market is hard, as we all know.
Yes.
But it is interesting to see this retail enthusiasm. What do you make of it, and do you think it's a sign that things are going to turn further?
Well, Julie, I look at our clients' behaviors, and what's really interesting to me is that this has been a year that's been very largely defined by actually retail traders buying more ETFs that are index related. What do I mean by that? SPDRs, QQQs, to a lesser extent IWM, representing S&P 500, NASDAQ, and Russell. And so what's been interesting over the last 3 weeks is we've definitely started to see more single stock play than we had seen for most of the year. And as you just said, Tesla has become the number one darling of retail traders, and that's a change from the last couple of years. It was all about Apple and Microsoft. Right now, it's more about Tesla and Nvidia, with Apple being the third wheel.
Tesla's commitment to innovation has been a game changer. The company's continuous advancements in battery technology have resulted in increased range, faster charging, and lower production costs. This not only makes Tesla vehicles more attractive to consumers, but also improves the company's profitability. However, while Tesla has already achieved remarkable milestones, the journey so far, well, it's not over yet. And it is evident that Tesla still has to do a little more to keep securing market shares. Hey guys, welcome back to Tesla Tomorrow. One significant factor that is driving the growth of Tesla stock is the belief in Tesla's long-term growth potential. Since retail investors are attracted to companies that offer not only financial returns, but also a sense of purpose and innovation. Tesla's mission is to accelerate the world's transition to sustainable energy resources, with many retail investors who prioritize investing in companies aligned with their values. This is why many of them are so keen on the automaker. After spending a record $17 billion on Tesla shares in 2022, individual investors earlier this year added another $13.6 billion to their total in just the first 2 months of the year, according to data from Vanda Research. There are a couple of reasons for this, and we're going to get into them today. But before we start, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything happening with Tesla. In order to fully understand the reasons behind the surge in retail investors buying Tesla shares, let's take a moment to appreciate the remarkable journey of Tesla stock. Over the past few years, Tesla stock has been on a relentless upward trajectory, capturing the attention and imagination of investors worldwide. After soaring throughout the pandemic, Tesla stock had its worst annual performance in history last year, dropping roughly 65%. This was partly as a result of questions over rising competition in the EV vehicle space, and it was coupled with recession fears too, which helped drive shares to a 2-year low under $110 by late December. However, 2023 has been a different story. Tesla's stock price recently outpaced the S&P 500's daily gain of 0.45%, closing at $257.50 in trading sessions, and it marks also a 0.49% move from the day prior. The stock also outpaced the auto tires trucks sector's gain of 19.76% and the S&P 500's gain of 4.25% at the time. Tesla's commitment to sustainable energy solutions, battery tech, and autonomous driving has captured the imagination of retail investors who want to be a part of something transformative. Also, Tesla's visionary leadership, led by the incredible Elon Musk, has been instrumental in building a company that goes beyond manufacturing electric vehicles. Elon Musk's charismatic presence and his ability to inspire trust and confidence have made Tesla a symbol of disruptive innovation in the automobile industry. And retail investors are drawn to the company's ambitious goals and its potential to revolutionize the transportation and energy sectors. Another key factor driving retail investors' interest in Tesla is the company's continuous growth and market dominance. Tesla's deliveries, for instance, have consistently surpassed expectations, showcasing the demand for its electric vehicles worldwide. Tesla's strong brand recognition and its expanding global footprint provide retail investors with a sense of confidence in the company's future success. Additionally, the rise of online investment platforms and commission-free trading has made it easier for retail investors to access the stock market and invest in companies like Tesla. This accessibility, combined with the increasing availability of information and analysis, has empowered retail investors to make informed decisions when it comes to investing and participating in Tesla's growth story. But there is one more thing. The power of community, especially for Tesla, cannot be underestimated. Retail investors often are a part of the Tesla fan base, and they're very enthusiastic. And they enjoy engaging in discussions, sharing investment strategies, and celebrating milestones together. And this very factor has elevated Tesla, especially in terms of brand loyalty. During the first 4 months of the year, Toyota saw a notable decline in its rankings, and part of it is likely due to electric vehicle makers like Tesla. While there are a lot of factors that affect automakers' brand loyalties, well, the effect of Tesla's presence in the market is definitely becoming palpable. According to a report from Automotive News, Toyota's drop could be due to conquest by Tesla, as the EV maker saw a rise in migrations for nearly every mainstream auto brand. In Tesla's case, the percentage of customers who migrated to Tesla was up 2.1 points to 5% year over year. The electric vehicle market is experiencing explosive growth, and Tesla sits at the forefront of the revolution, with increasing awareness on environmental issues. And customers are also embracing sustainable transportation options like never before. This surge in demand for EVs positions Tesla to capture a larger market share. No doubt EV sales are still very small compared to the sales of ICE vehicles. However, it remains a fact that Toyota, Honda, and some other Asian brands are being impacted tremendously by Tesla. There is a substantial change from how things used to be, and this is being driven by the extraordinary clout and success of Tesla. Tesla's loyalty is so dominant that it's up 1.1 points, even though the company's not really released any new vehicles to the market for several years now. One thing is certain, Tesla is the only car maker today that is keeping more customers than it's losing, and any recent changes to analysts' estimates for Tesla should be noted by investors, as these revisions typically reflect the latest short-term business trends, which could frequently change. Positive estimate revisions reflect analyst optimism about Tesla's business and profitability, and as such, it's believed that they are directly related to near-term stock moves. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.